Hello and welcome everyone. Thanks a lot for joining us on this Sunday for this week's live stream. In today's live stream, we are going to cover a lot of interesting topics, right? What's happening in the market? We are seeing this amazing bull run. So we'll be evaluating that does this bull run continue? What are the factors that are leading to this growth? And why are FIIs pumping in money into the market? We'll do an overview on how the market is looking right now. What are the opportunities out there? What are the sectors that are working? And then I'll give you a brief about the small case performance as well as the PMS performance. So let's just get started and go right into it. All right. So let's look at what's happening in the markets, right? You can see on the weekly numbers that Nifty has taken, is doing better than the other indices in this week, right? Small caps, mid caps have all done a little bit less than the larger caps, and that is because FIIs are pumping in money into the market. When FIIs pump in money into the market, then you would see that they typically end up buying a lot of large caps, right? And that's what is happening. Let's look at the monthly numbers. On the monthly numbers, you will see that small and mid caps are doing better, and Nifty is doing the third number in the monthly performance, right? So in the monthly performance, still mid cap seems to be the winners. Let's look at the sectoral performances. In the sectors, we'll see that the energy sector has taken up, is sort of doing the best in the weekly numbers. PSU banks, banking, financial services, metals are doing incredibly well, whereas pharma, FMCG, and auto are sort of lagging. In terms of the monthly numbers, we see that energy, real estate, metals are again leading, and FMCG, media, and pharma seems to be lagging in the index, in the sector levels, right? In terms of factors, it's very interesting. Then on the weekly numbers, Nifty seems to be doing better than most of the other factors, right? And that is because, like we said, the FIIs are pumping in money, and that money is going into the larger stocks. Now let's look at what's happening in terms of the FII performance, right? So in terms of the FII performance, you would see that FIIs are right now pumping in a lot of money into the markets, right? And why are they doing that? The FII buying is happening because India has shown a very strong economic growth. The projected growth for India is highest among all the large countries. India, in fact, in terms of growth, outperformed the projected numbers in the last quarter. The valuation of the Indian equities seems to be strong, right? So we are not extremely overvalued. The large caps have in fact lagged over the past few months. And you would see on the broad market level, Indian valuations are still very attractive. The third factor that's leading to a lot of buying from the FIIs is the Indian rupee, right? So the Indian rupee seems to be weakening right now. And when the rupee is weak, it makes buying into India a much more attractive proposition for the FIIs, right? So a weaker Indian rupee attracts a lot of FII buying, and that's what we are seeing on the from the FII front. In terms of monetary policy outlook, right? That's the big thing, right? So people are sort of expecting Indian regulator to cut down rates, and that would bring in a lot of growth into the economy. And secondly, people expect the global markets to also see a rate cut. And if the global markets see a rate cut, or in the December quarter, in the December month, if the Fed announces that they're ending the rate hike cycle, that would be a big boost towards all of global equities. Let's look at technical factors. In terms of technical factors, again, we are seeing that there's a lot of short covering, and the market dynamics seem to be favoring the bull run. Another big factor, that has sort of triggered this growth is the win by the ruling party BJP in the major state elections, right? People are expecting that after this state election win, which was again unexpected for the BJP, the central government will end up being strong in the next year as well, and political stability, strong central government will lead to strength in the economy, and it will keep on the FII being buying being continued. And on the overall level, I think the Indian markets are seeing a very strong sentiment right now, and that seems to be something that the FIIs have picked up. Now let's talk about another important topic, right, which is the US Fed. The US Fed, might in the December quarter, in the December policy meeting, might end up saying that they are closing the rate hike cycle. Right, the rate hikes have been going for more than 1.5 years, and it might be the time when the US Fed sort of pauses on that rate hike cycle. And what are the reasons for that rate hike pause? See, number one is that if you look at the economic data coming out of the US, you would see that the inflation has moderated quite a lot. So, inflation in the US is at 3%, and it has come down from 6.2% in the October month. And that's extremely encouraging for the US market. And the US Fed might end up pausing the rate with that signal. In terms of market expectations, if you look at it, the CME group sort of, which collates what's happening among the expectation for the rate hikes, sees that 21% of the people only see cause for a rate hike, and rest of the people see either the Fed pausing the rates or putting an end to this rate hike cycle. If you look at the precedents right now in March and September, in fact, US Fed has paused the rates, and people see that continuing in the December quarter as well. There has been recessionary concerns in the US. If the rate hikes keep on continuing, people expect that there could be a recession, and I think the Fed would again take heed of this situation, and they might end up pausing the hike cycle and sort of supporting the market in that sense. Also, the global economic uncertainty with the wars happening, with so much happening in the global market, could end up impacting the US market adversely if the rate hike cycle is not paused. So, again, that's a reason why the Fed could take a stance of not hiking the rates and even putting an end to the rate hike cycle in the December quarter. Now, finally, let's talk about the case of growth in India, right? So, FIIs are buying, the US rate hike cycle might be ending, but India itself is seeing a strong growth cycle, right? And there are various reasons why India is seeing this strong growth cycle. Number one, the macros have stabilized, right? There is a lot of macro stability and a lot of economic growth that's supporting the growth narrative. India's dependency on the global market has reduced, right? So right now, when we saw a lot of trouble happening in the US markets, India remained stable. With everything happening in China, India remained stable. So India seems to have decoupled a little bit from the global market. And this reduced global dependency will lead to a growth path for India. Thirdly, the improvement in terms of infrastructure, right? Indian infrastructure capex upsurge has happened. There is boost in the manufacturing sector. There is a boost in the defense. There's a boost in the railway sector, and that is sort of uh, bringing the growth story to come up much stronger. Let's look at the corporate profits, right? In terms of corporate profits, also last quarter was better than expected, and that is again, boosting the India growth story. Indian government might allow retirement funds to also invest into stocks. That's what we've heard, and that would again lead to a growth in the Indian market coming from the domestic front. Consumer spending has picked up with the election coming up in the next year. We expect a number of shops to come into the market, and even the rural demand to pick up, right? So that rural demand, which has been at a low for a very long time, could pick up in the run up to election, and that could be a big thing for the India growth story. Again, the digital infrastructure, India is a very strong country in terms of digital infrastructure, in terms of the IT sector, and these things are working in favor of the India growth story. The government's focus on digital India, government's focus on enabling growth in India by spending on the digital infrastructure is also working in favor of India. And lastly, India has a strong demographic advantage. Our population leads to high consumption, leads to higher skill set, a lot of skilled workers in the manufacturing, IT and services sector. That boost the India growth story. So a lot of things happening, and a lot of things that are sort of right now hinting at this bull run that has started to be a long term bull run. So it's been a very, very positive cue for the India market, and we see a very, very strong case for growth in India. So, having said that, let's move on to the topic at hand, right? So, in this live stream, we want to talk about 4 years of momentum. I would love to know from our audience that how many of you guys have, in fact, invested in the Right Momentum from 2020, right? So, we launched Right Momentum in 2020, towards the end of November, beginning of December. How many of you guys remember that, and how many of you guys, in fact, have invested into it, right? So I remember when I started this, we were in the middle of the bull run, and it was an amazing time for momentum, and we were seeing some regulatory changes happening in the India market, and we were so pumped about the momentum investing strategy that we launched it as a free strategy in the beginning. And we are also and then we took it out as a paid small case, and that's when we saw this whole growth happen. I'm sure many of our listeners, in fact, have invested in the momentum strategy for the all 4 years, right? Let's talk about what's happened in the 4 years with the momentum strategy. So in the 4 years, Right Momentum has given a 321% return. So Right Momentum clearly is a multi-bagger, and that's also a function of the amazing market that we've seen. But the strong growth that the Right Momentum has seen, it's quite exceptional. If you compare it with the benchmark that Right Momentum has, you would see that Right Momentum, in fact, has given a 150% outperformance over its closest benchmarks in this period, right? So it's not just done well on its own, it's done well in comparison with the benchmark also. In these last 4 years, I pushed 60 rebalances for the Right Momentum strategy. So 60 times our clients have had to rebalance. And if you look at it on average, that means only 15 rebalances per year, right? And that too, I think most of the rebalances have happened in the 2020 to 23 year, where there was a lot of volatility, and our subscribers had said that they wanted much more frequent rebalances. So we ended up rebalancing on a weekly basis for a while. Otherwise, Right Momentum has had a very, very stable rebalancing profile. We rebalance on a monthly basis. It reduces the headache for the customers to rebalance every week. Plus, it also gives us an opportunity to invest into the stocks that we're investing for long-term growth. We've had 131 stocks come into the Right Momentum strategy in these 4 years, and 14 of those 131 stocks have in fact turned multi-baggers, right? So we'll talk more about it. First, let's see a comparison of Right Momentum with the multi-cap index, right? So you can see the clear difference in performance between these two series. You can see that most of the outperformance was built during this period, 2021-22, when this bull market happened, and momentum ended up being very, very strong. Again, recently, if you from March of 2023 to now, Right Momentum is slowly increasing the gap between it and the multi-cap index. But also, if you look at the 2020 22-23 period, you will see that Right Momentum still had a small outperformance over the market in a volatile time as well. So this strategy in the last 4 years has done well, not just in good times, but also in the volatile times. But multi-cap index is a different benchmark. Let's compare Right Momentum to the Nifty Momentum Index, right? So a lot of the mutual funds that you guys might be seeing, which are coming up with the momentum theme, in fact, typically just follow the Nifty Momentum Index. So Nifty or NSE sort of publishes a momentum index that picks up momentum, top 30 momentum stocks from the 200 stock universe, right? And that is what a lot of mutual funds follow. But if you compare Right Momentum with this, Nifty Momentum series, that you will see that Right Momentum has in fact outperformed the Nifty Momentum by a 140% as well in the last 4 years. So right momentum is not just doing well by itself or in comparison with a multi-cap benchmark, but also with the most appropriate benchmark for momentum strategies, which is the Nifty momentum benchmark, right? So the philosophy that we follow, including multiple momentum signals, including risk management in momentum, having tight diversification, uh, including earning momentum as well as price momentum, seems to have worked in favor of right momentum in the last 4 years. Now let's talk about the returns, right? So, like I said, there have been 131 stocks in right momentum. But, obviously not all of them have given you a positive returns, right? We are not magicians. We don't pick all positive stocks, right? So in fact, almost 40% of the stocks in right momentum have been exited at a loss, right? But still, this strong performance has come because uh, a large majority of them have been winners, right? So close to 60% of the stocks in right momentum have ended up positive. If you look at the distribution, you would see that 15 stocks have given more than 100% return in right momentum, right? So we've had 15 sort of multi-baggers that have been there in this portfolio. And on an average, the return of any stock in a right momentum portfolio would be between 50 to 100. But these 15 stocks that have done amazingly well in the momentum portfolio have skewed the performance in favor of right momentum. Let's talk about the holding periods, right? So you see that we typically have a 1 month churn, right? So every month we send out a rebalance, right? We don't sell stocks very, very quickly. It's typically a month, but still you would see that 31 out of those 130 stocks, right, have in fact been held for more than a year. So I think a lot of questions that we get from our customers is, what is how much tax do I pay? Do I pay a long term tax or do I pay a short term tax? So if you do this comparison, you would see that 31 out of 131 stocks are in fact long term capital gain and rest of them are short term capital gain. And in fact, we are holding on to our winners, right? We are not sort of quick to churn. We are not being very, very uh, dynamic about it. We hold on to things that are working. We hold on to stocks that are showing strong momentum, and that has led us to holding more than 31 stocks for more than 365 days. Let's talk about the multi-baggers, right? So obviously, among these 15 stocks that have done best, a lot of these stocks have come in during the 21-22 bull phase, right? So you all your Adani stocks, Tata Lexi, KPIT, and Deepak Nitrite. These were the stocks. Tube India. These were some of the stocks that did amazingly well in 21-22. If you guys invested with us during that period, you would have seen that these stocks ended up being huge winners in your portfolios. But more recently, we've seen, you know, infrastructure linked stocks like RVNL, Masgao Doc, uh, and banking stocks, Bank of Baroda, Tata Power end up being multi-baggers in the right momentum strategy. So obviously, momentum shifts, and similarly, stocks in the right momentum shift. And while the tech stocks in the last bull run were the strongest, right now we are seeing infrastructure strong stocks being the strongest in this bull run, right? So we've seen these amazing returns come out of these multi-baggers in right momentum. So that was about right momentum. I hope that gave you a brief introduction of how we've been doing with the momentum portfolio in the last 4 years. There have been some amazing opportunities. We've held on to our winners, and we've seen this outperformance being built up in a very stable fashion, not just in bull market but also in bear markets with this strategy. Now let's look at an overview of our performance. I'll start with the PMS. I think that's how the this presentation is structured. You'd see that on the PMS side, we built 50 crores in assets in 3 months. The alpha strategy has done amazingly well, and even the other strategies have done quite well. Let's look at the live performance, right? So we've been live for close to 4 months now, and in each of these 4 months, we've done better than the market. The factor fund has built a more than 20% return. If you look at factor fund hedged, again the returns have been quite strong, and alpha fund in the PMS has done tremendously well. We've generated a lot of wealth for our clients with this strategy. It's given more than 25% returns during these 3 months, right? So that was a quick brief introduction on the PMS. We'll do a broader discussion of the PMS in the next live stream, but this live stream is about our small case portfolios, right? So on the small case, let's look at the performance of our strategies that follow larger themes, right? So let's look at again the momentum strategy, right? Momentum strategy in the last 1 month has given an 11% odd return. Balanced has given a very strong return, and this has been in every period that you look at, we are doing better than the indices, right? So the performance of our strategy that follow a multi-cap philosophy tend to be very very strong. In Right Momentum, which is the focus portfolio for this live stream, has done tremendously well, right? Uh, let's look at our strategies that follow uh, diverse themes, right? So there you have the small cap strategy, you have the innovation strategy, and you have the new India strategy, right? So let's look at these performances, and what's very exceptional is the new India performance, right? So new India in the last 1 month has given a extremely strong performance. So let me take you guys to our new India manufacturing portfolio, right? And give me a second to take you to that portfolio. So let's look at the new India manufacturing portfolio. 2 year CAGR of this portfolio have been 52%, right? That's quite exceptional. And and what you have to understand is that we started this portfolio right before we had a strong market crash in 2022. So in the first few months of this strategy, there was in fact a lot of volatility. Still, this strategy has given a 52% CAGR over the last 2 years. And look at the recent performance of this strategy, right? Compare it to the small cap index, compare it to the large cap index, right? The strong performance sort of speaks for itself, right? And that is because with the government, the results of the election, there has been a boost in the sectors supported by the current government, right? Which are the sectors in the manufacturing sector? Which are the sectors in the PLI segment, right? Stocks that are getting advantage of the PLI, stocks that are getting advantage of the infrastructure spending, and that's why the new India portfolio has emerged to be a very very strong strategy in the last one month and in the last 1 year as well, right? So it's been one of those exceptional stories that we've seen come up. And but not just new India, innovation, small caps, all of these portfolios have given a very strong performance in the last 1 month, and all the other horizon that we're looking at. Let's talk about our most favored strategies in the recent times, which is the alpha strategy. I keep on checking uh, the small case app, and uh, Wright's Alpha Prime always ranks highest in terms of the most bought strategies in the new as well as the existing segment on the small case app. If you see the recent performance, again, we've seen a very strong performance happen in the Alpha Prime strategy. There has been some correction over the last couple of days. We are sending out a rebalance this week, but the performance has been quite exceptional, right? So 5 6 month and 55% returns is extremely interesting, right? This is not the sort of returns that you see in a normal scenario, and this strategy in the last 6 months has been an investor favorite for a reason, right? uh, and if you compare the performance of the strategy across various horizons, you'll see that it is doing very strong in different horizons. And yeah, I think that's pretty much it about what we wanted to cover in this particular session. We'll go to the Q&A. If we were to talk about what is the strategy that is the focus strategy for this session, I would say Right Momentum is our focus. Not just because it has done tremendously well in the last 4 years, but also because you know the recent performances across the board, right? Not just in any short span of time, but across the board, in a bull market, bear market, or any sort of market, have been extremely strong about the strategy. And it it is extremely stable, right? You can see that if you look at the P ratios for this strategy, you would see that it's not biased towards only small caps, right? It's not biased towards only mid caps. It has a good balance of small, mid, and large caps. It's a very stable strategy, very diversified, 20 stocks. So it can be a very key strategy in your portfolios, even if you're a moderate risk or a high risk investor, right? So that is the focus strategy for this year. And with that, we will move on to the Q&A. I can see a lot of people, speaking, putting out their comments, and Siddharth will now pick up some of the questions, and let's do a quick Q&A for our audiences.
Yeah, hi Sonam. So Sonam, the first question that we're seeing here is from Madhav Agarwal, which was a question related to the sort of downturn that we may see, at some point in the future, where
Uh-huh.
he's asking specifically for Alpha Prime, but you can answer it maybe from a general perspective as well. Uh,
Mhm.
what what happens if the portfolio turns 5% negative? Um, and do you take a full cash position? What is the exact sort of scenario there? Can you sort of highlight on that?
Right. So see, if the market tends to be a little bit volatile, right? If you see volatility into the market, the right momentum strategy would I mean, the alpha. All of our strategies do have a deallocation policy, right? What that means is that if there's any sharp correction, right? If there is any sharp correction that seems to be extremely volatile, we take out money from the strategy and we put that into cash, right? So that would happen in both momentum and alpha strategies. Obviously, in the last 4 years with the momentum, if you look at it, we haven't had a lot of opportunities to deallocate, right? Right momentum has only deallocated in 2020 to 23, and that too only by 15% for a very short span of time. Like I said, that we expect the markets to be good, and if it continues to be strong, we hopefully don't get an opportunity to deallocate, but definitely we will deallocate in a systematic fashion. It's not like we see the volatility and we move to cash with the whole money. No, that will not happen. It will happen systematically. With a first 5% correction, we go 5% to cash, and we keep on doing that as the correction keeps on going, right? And when the correction ends, we start reallocating and bringing that money back into the strategy in a systematic fashion, right? And that's what we have back tested, and that's what we see being a very strong cue for the market, for the particular strategy.
Got it. And the follow up question that he had on that was also on whether you think this strategy, specifically Alpha Prime Momentum, would do well in bear markets as well.
Uh, I mean, see, if you, like I said, that momentum, we talked about momentum in the bear markets, right? So, momentum, in fact, has done stronger than the benchmark during the bear market as well, right? If we look at, like, I think we published, a report on this a while back, right? I think towards the beginning of this year, that if you compare the performance of momentum during the volatile phase, also momentum has done extremely well. Obviously, but if you have subscribed and if you look at the stocks in the momentum strategy or in the alpha strategy, you would see that these are the biggest winners, right? They ended up being a little bit overvalued, right? And that is the nature of momentum, right? We are picking up winners that have a strong trend. So you would see some of these overvalued stocks come up, but and obviously when a correction happens, people sell overvalued stocks quicker, right? And yeah, I think that's what we see that with start of any correction, you might see some heightened volatility in these strategies. But again, if any volatility continues, you would see that these strategies would see a churn where safer stocks, slightly larger stocks in safer sectors would start getting allocation in these portfolios, and that is what would happen. So I think definitely if there is volatility, then we will see that the focus of small caps goes away and slightly larger stocks, slightly safer stocks will come in, and if there is a much heightened volatility, like we said, we will move a little bit into cash as well.
Fair enough. There's a question from Sanjog where he's asking, again related to Right Momentum, Alpha Prime. What is the sort of longer term vision? Is it again catered for long term investors? And from the perspective of where we are in the current market cycle, and this is
Mhm.
a question that we keep getting asked, I think, in the chat and outside as well. Given that it's so bullish and so strong, what is the correct time to invest more into the small case?
Definitely. See, so like I said, we've been talking to our investors and people much more actively in the past 6 months, right? We've been pitching the PMS, we've been talking to a lot of people, and during all of those 6 months, right? I'll tell you, every day I get this question that, are we at a top and should we not buy right now? Should we, wait for any correction? What I always say is that, correction is part of the market, right? And these
Mhm.
strategies, right, these are strategies, right? And we will not just buy a stock and hold. We also tactically shift as the market shifts. So, we have risk management plays for the bear market. We have tactical allocation strategies if the bear market comes, and you look at it as a strategy, right? So if you, let's say, I would assume there are a few people that who invested, let's say, in 2021, saw some growth and then stopped investing in 2022 when they saw volatility, right? Why they said, why should we pay you when you're not giving us that return, right? But if you stopped investing at that point in time, and you did not restart, and you ended up restarting late, right? If you didn't restart in 2023 when the bull market started, you would have missed out on this amazing rally, right? So what I would say is that, believe in the strategy. We have a lot of risk management in play. Corrections, if that happens, is part of the strategy, and we become much more proactive in the correction phases. We are reallocating, we are adjusting, we are doing the risk management, and trust, like, make this part of your equity investment strategy, right? So equity investing, any equity investing, right, tends to have good times and bad times, right? But if you get scared of bad times, you would miss out on the long term growth path, right? So they, like we show on a slide, that there are periods when the market, when, let's say, momentum has given 80% return, momentum has given 60% return, but there are periods when the momentum strategy has given only 10% or has ended up flat also, right? But
Correct.
for any 3 to 5 year horizon, momentum, confidently in the last 10 years has given 35 to, I mean, 25 to 30% CAGR. So, if you're allocating to these strategies, have a long term vision. Don't get bogged down by any short term volatility. And, even if there's a correction that happens right now, it might be a good time for you to accumulate at low prices. So that's what we tell us. That's what our philosophy is, right? So we don't take a call key, not invest right now. We let the strategy, sort of let the allocation come from the strategy that talks about, if we have to deallocate or risk manage, right?
Sure, sure. And so naturally, the second question here is, which is a question that some people have asked here. Animal for Kids is asking, what is the amount that they should be investing,
Hmm.
and he's specifically quoted a number of about 1 lakh
Mhm.
for a long term investment, and whether they should increase that to get better CAGR returns, etc.
Right. So see, I would talk about your overall allocation, right? So depending on your age and your risk profile, let's say you are a moderate risk investor, I would assume 25 to 35. I'm sorry if I'm wrong, but let's say you are in a moderate risk early investment phase, then you should have a 70% allocation to equities, right? Uh,
Mhm.
and in this market, maybe even higher, right? So of your overall wealth, puts a large capital into the equity investment cycle, so that you get that wealth appreciation. And in that allocation of 70%, right momentum can be as much as the whole of it, or a significant portion of it. So that's what I would say. So what is the amount that you're looking to invest into the stock market, right, in terms of your overall allocation? And in that overall allocation, you know I would not say that you should be underconfident in allocating to momentum. We've seen a very good story that I've told you about last 4 years, right? So I don't think, and I think we proved it's a very stable and strong strategy that could be a strong portion of your allocation.
Sure. And then naturally, the follow up here is from Alok Shaw, where he's
Mhm.
asking if there is the investors are requesting for a Christmas offer for Alpha Prime up to 50%. If there is a code that we can share. regarding that.
So I think, see, I think Diwali was, we want to keep the Diwali as the biggest sale day, right? I think that is when we sort of give that 50% offer. That's the unique day, and that's the Indian New Year. Uh, but yes, I
Naturally.
think, we might, so that you are the best person to answer, we might
Yeah,
give out some offers during Christmas and New
sure,
Year's as
sure.
well. Yeah.
So I think currently you can use, you're getting a 20% off. It's valid till end of day today. On both Right Momentum and Alpha Prime, you can use Momentum 2023 to sort of avail that. For anything else, we will sort of have to sort of think about it and sort of get back to you guys on that. Just sort
I've
of
added,
going through these. Sorry, yeah.
yeah, so I've added the coupon code on the screen, so you guys can.
Okay.
This is the coupon code that gives you 20% off till the end of the day today, and this is a special offer because of the Right Momentum completing 4 years. We shouldn't have done this because we just gave a massive offer last month, right? But
Correct.
definitely, it's a big, big occasion for Right Momentum, and this is a coupon code that people can use to allocate right now.
Yeah. So there's a question by Finance Guru. He's asking, once elections finish next year for both India and US, what are your sort of thoughts on stock market movements for the Indian market specifically?
Right. So I think that's a big question, right? And see, right now, like, if you look at the narrative, I think everybody's assuming that the next year election will be very strong for the ruling party. They won the state elections where nobody expected them to win also. So people expect, the same government to continue. And if that happens, again, it talks about political stability, if not anything, right? So if the political situation in India is strong, the policies that have been happening right now, the investment in manufacturing, PLI, India, China plus one, etc., will continue to happen in the next few years as well, right? So that becomes a strong cue, and political stability always attracts foreign capital. So that is what would be great. But even if there is a change in government, let's assume, or a government that comes with a smaller majority, I think the stock markets tend to be independent of what's happening with the government, right? If you look at any election year historically, you would see that even in any election year, Indian market has always done better than the global market, despite any unexpected government change or continuance of government. So, right, we are not extremely worried about it. Obviously, if there is a government change, so then we might see the allocation of sectors shift a little bit. The sectors where the BJP government puts a lot of focus, they might not get allocation with any other government that comes in, and there could be sector rotation. But I will let the political analyst sort of give us the estimates of it, and analyze that. Not the biggest expert there, but I would say is that Indian markets tend to be independent of the political situation in the broader term.
Fair enough, fair enough. This is a question that we're sort of getting in the chat. This is a question asked by Bhushan, and I think maybe Finance Guru as well. They're asking, one is if they should invest between Alpha Prime and Right Momentum, what they should sort of go for. I think you've kind of answered that. The second question here around the sort of same theme is um, that they've seen some sort of an overlap between some of the stocks that were there in Alpha and in Momentum. Um, what should you do in that sort of scenario? Is it to do with risk strategy, so on and so
Definitely.
forth?
Yeah. I would add a little bit on what I told about allocation to momentum, right? So momentum can be a majority of your equity allocation, but alpha prime is a high risk strategy, right? When I say high risk, what that means is that in a bull market like right now, it has given you 58% returns in 6 months. But if there is a sharper correction, you would see sharp correction happening there, right? So alpha prime, until unless you are extremely bullish about the market, and you are happy to take risk, you've seen a few cycles in the market, and you're not afraid of risk. Until unless that is the case, it should be a small portion, so you can allocate 10, 20, 30% of your portfolio to the alpha prime strategy, right? Second question was on the overlap between alpha and momentum stock, right? So alpha prime, like we've said again and again, is a momentum strategy only, right? It is a momentum strategy, but it is concentrated, right? That's the difference between alpha and momentum, right? And when you're looking at this, I think there's a question that one gentleman keeps on asking us. We've got a lot of emails that say that there is overlap between alpha and momentum in terms of stocks, right? But see, what's different between these two strategy is the concentration, right? So alpha is highly concentrated, momentum is a little bit diversified. They do have similar a correlation that might be strong, but very different risk profiles, right? So on a good day, you might see that alpha prime jumps up 3%, whereas momentum might be up 1.5%. On a bad day, alpha prime might have a sharper correction, right? So look at these two strategies as independent allocation. Don't be worried about any overlap in stocks, right? You might end up having slightly higher allocation to certain stocks in the in your overall portfolio, but that's not a bad thing. I think the concentration would be maintained, and I'm not worried about any overlap that's happening between these two strategies, right? We should look at them as independent strategies, right, that have their own risk and return profiles.
Sure, sure. And typically, I think if there is an overlap, at best, it'll be typically one or two stocks.
Hmm.
And it's very rare that it sort of goes beyond that at all, right?
Right.
So there's a few more questions here. Adarsh Maheshwari is asking the recommended amount range for investing in Right Momentum. I think we've kind of answered that. So we can
Mhm.
sort of move forward. Do the returns that you were showing earlier, Sonam, do they show? Are they net of charges? Are they including charges? That's a
Uh,
question by Ramchandra Gangadharan here.
Yes, Mr. Ramchandra. So these are all before charges, right? But typically, when people invest on the small case platform, they use a discount broker, and discount brokers like Zerodha, they have a zero brokerage model, so you end up paying a very low cost for your trading. On the other hand, you do pay a small amount of security transaction tax, and when you sell a stock, that would be a part that you incur. But otherwise, this is a very, the transaction costs are extremely low. Uh, One consideration that you should have is on the taxation front. So, like we said, that you anyways have to pay 10% tax on any profit that you make in the long term. With momentum, more than I think around 30% or 20 to 30% stocks are held for the long term, but rest of the stocks end up being in the short term capital gain. So you are paying 5% extra tax on those stocks only on the profit, right? So that's not a huge differential. But yeah, those are the costs that are there that you have to understand that will be part of these investment portfolios in the long term.
And he allows a sort of follow up question. Taking into account our subscription costs, what is the right amount that he should like? What is the minimum amount that sort of makes sense for him to invest?
Right.
I think we've answered that somewhat, but if you want to sort of shed some light
Yeah, yeah. So
from a
I think,
cost
see,
perspective.
our cost is 3,600 rupees for 6 months, unless you've got this massive discount, those massive discount that we've offered, right? So roughly 7,200 rupees for for around a year, right? And obviously that's significant for a smaller capital, right? But roughly you want to your operational cost, or your cost for the strategy to be less than 1%, right? So we would recommend you to have at least a 2 to 3 lakh portfolio when you invest into these strategies to make the best. But I know, see, in the Bangalore meetup that we had, right, we had a lot of students come in who wanted to
Right.
start small, but were a little bit worried about the cost. So what I told them was that start small, and keep the habit of investing going, right?
Yeah.
So you might start today with 50,000, but I'm sure as you start your career, as you continue to grow your portfolio, that becomes significant over the next 1 2 years, where the cost will become very insignificant for you, right? So the crux of the matter is that start early, invest, uh, create this habit of investing, right? And if you keep on this habit of investing, then the cost will become insignificant for your portfolio as well.
Yeah, and then I think there's a few questions for making yearly subscriptions. Uttam, I think we've answered that in the chat. We're not allowed by SEBI to sort of extend beyond 6 months. That's the maximum that's allowed, and that's available
Right.
today. Another question is from Divyam Shah. He's asking for Right Momentum earnings factor was added to the strategy 1 year back. Any idea of how price momentum approach would have played out compared to the current version of momentum strategy?
So that's a very interesting question, and thanks a lot for that. See, earning momentum strategy is something which is based on how the analysts are seeing the stock earnings happening and how they are revising it. This is something that we added around a year ago, and it, I think it has added a lot of flavor into the strategy. I think if you compare earning momentum and price momentum over the last 1 year, you would see that earning momentum might have done stronger, at least in the last year. Right now, I think we'll have to look at that picture a little bit, but I would assume that I think earning momentum is only adding to this strategy. That's why we included it.
Fair enough. Fair enough. I think there's another question from Vikant, which is in similar tones. I think we've answered it earlier. Given the recent bull run of the market, is the market overheated? Does it make sense for someone to invest at this time? If yes, which small case would you recommend?
Yeah, yeah. See,
Happy
I
you can
think
take it on.
definitely. See, I think let's look at it in a structured fashion, right? I think overheated, underheated is a very vague way to look at it. See, when you are trying to evaluate the potential of growth, right? First thing is, do we expect growth in the economy? Which I think in the first part of the presentation we did say, right? We do expect growth in India for a number of reasons, not just one or two reasons, but a number of reasons, right? Strong manufacturing, strong digital infrastructure, strong consumption spends, right? All of
Yeah.
these point to strong growth. Second thing is valuation, right? Valuations are not expensive for India in terms of historical average. Large caps have not trended up that much, so valuations are in favor of the country, right? And thirdly, irrespective of that, whenever the FIIs are going to buy, you are going to see a trend, and FIIs seem to be buying. If the US cuts the rates, or if the US says that the rates hike cycle is over, you would see that risk asset across the world will see appreciation. So that's what we're seeing in Bitcoin right now, right? It has been totally dull for more than a couple of years, but recently it's been seeing an upsurge because people expect risk assets to do well as the Fed stops the rate hike cycle. So I think a lot of positives that hint at a strong growth momentum happening, and that's what we are also betting on. I think that's what I would say.
Fair enough. And just a sort of a feedback, I suppose, from Renault is that he feels that New India should also be part of the PMS structure that you guys have. Um, so
Uh,
that's one feedback there.
No, definitely. See, we do have a lot of stocks of the manufacturing sector in these various strategies. But to be honest, the feedback that we get from a lot of our investors, both on small case and PMS side, is that you guys have a lot of products, and we
Sure.
get confused which one to choose. So, I don't think we have a plan to launch anything until unless something very very exciting comes up in the recent in the future.
There's a question again from Uttam Kumar. He's asking what was the drawdown strategy for drawdown for the momentum strategy. Again, a lot of this is available on our website. You can go and check it out there. But any
Yeah, so I think
thoughts?
momentum strategy maximum drawdown that it has seen is close to, I think, 10 to 15%, because it went live after the COVID crash, right? So it hasn't seen a huge instance of correction. The maximum it has seen is, I would assume, 10 to 12%. During the COVID times, as per our backtest, the momentum strategy would have seen closer to 20 to 23% correction, and that is because of the deallocation policy that kicks in during volatile times, right?
Yeah. I'll just go to a few more current questions. Just give me a minute. There's a question from Kanandeep. He's asking, can we book the gains during the high gains and reinvest them again through small case through right?
I mean, definitely you can do that, right? But again, that adds an element of timing the market at your end, right? And whenever an investor is trying to time the market, I would say that the tactical nature of this strategy takes care of that. So if I won't say, let's say we have had a few stocks that have turned multi-bagger in the strategy, right? And that has only happened because we held on to them for the long term, right? So if you, let's say, got a, let's say, 50% return of a KPIT during the last bull cycle and sold it, you would have missed out on it turning into a multi-bagger, right? So what I would say is, let's not try to time the market. Any ups and downs are part of it, but the whole beauty of it is in the long term, right? So, you know, talking about short term is not that attractive, but look at 4 years of performance, and that speaks out for itself, right? So investing into long term is what really is the beauty of these strategies. So instead of trying to time it, let's trust the tactical nature of momentum that will guide us, right?
Mhm. Again, a question from Aritra here, Bhattacharya, where they're asking, with FII is expected to put money in large caps, when is the next rebalance due? Taking that into consideration.
Right. So, see, on the alpha strategy, we are going to push a rebalance tomorrow. On the other strategies, typically we rebalance at the end of the month. So, the 1st of January, New Year's would be the day when you get your rebalances. And if we see an opportunity to rebalance in the middle of the month, we'll do that. But right now the plan is towards the end of the month only.
Great. And then I think we've answered. So, Karandeep, your question was on what type of strategy would be great to invest considering the upcoming elections. We've kind of answered that earlier. So, I think you can just sort of rewind and then look through that. Another point Future King is making here is that we don't have any real estate specific stocks in the Alpha Prime portfolio, even though that is doing well. Any thoughts on the real estate sector in general?
No, definitely. I think real estate has been extremely strong and continues to be strong. I think the trend after COVID has turned in favor of the real estate segment. If the bull market continues, those stocks will continue to be strong, and we
Mhm.
might end up seeing more stocks in the real estate segment come into our strategies. And right now, they haven't come up probably because of you know uh, the nature of the strategy, the diversification that's trying to maintain. But yeah, I think there's a fair probability that some of the stocks come up in the strategy.
There's a question from Praveen Kumar. I think you've kind of answered it, but just you can just sort of reinforce the point here. The difference between Momentum Alpha Innovation Strategy portfolios, how many stocks are sort of so superimposed. Praveen, we've
Right.
answered that earlier. You can just sort of rewind and look at it. But the broad point here is that a lot of these portfolios are very independent in their own right, and if you're looking at in each of them in their own capacity, then they're performing really well. There are minor overlaps, if at all any, typically restricted to about one or two stocks within all of these sort of portfolios.
Right.
Um, Here's a question from Renault. Question about momentum. When the mid cap and small caps have run up so much, will the algorithm start sort of moving towards the large cap quality stocks? Maybe looking for, let's say, correction in the market.
Yeah, it definitely might happen, right? Because like we said, the FIIs do favor large caps, and they might get into flavor. So that would happen. We have in fact seen some large caps come in the recent months, if I'm not wrong. And I think if the trend continues, then we would see a tilt happening towards quality and large caps as well.
Um, Great. And then there's a lot of questions on what is the right time to invest, how much to invest, guys. I think you can just sort of go back to the live video where you can sort of see when we're answering those.
Right.
Um, okay, so here's a question from Sanjog, which I think we've sort of resolved this time around. Sometimes I feel a bit unfair that new investors are getting coupon codes and discounts, but existing investors don't have anything. Is there anything that we have for that as well? Um,
So in
so
terms of
Sanjog, yeah, go ahead. Go ahead.
coupon codes, no, no. So that you go ahead and answer, please.
Yeah, no, I was just gonna say, so Chanjok, this time we have a coupon code Momentum Sub 2023. It is for anyone that is subscribed prior to 29th of November. We've sort of tagged it to your account. You should be able to see it, and you can then, subscribe to the portfolio. Sagar is asking, he wants to know more about option buying products under the algo schemes that we have on our website. How does that typically work? Any sort of light on that?
Right. So, see, we are trying to find a solution there on how to offer those strategies to investors, right? So, right now, I think the SEBI mandate says that don't, like, for at least for people who are registered with SEBI to not go on unregulated platforms. So, initially, we were available on some platforms, right, where we were publishing these algo strategies. But right now, I think we stopped doing that after the SEBI rule that or SEBI guidance that came in, and we're trying to find out solution where we can build a system of our own to offer these algos to investors, get it checked by SEBI, or the exchanges like the rule says, and offer it out. So we're sort of exploring something on that side, but unfortunately, we don't have a solution right now.
Fair enough. So Mihir is asking again an interesting question. This is on not on the minimum side, but on the maximum side of what he should be investing in, let's say momentum or alpha. If his portfolio, let's say, reaches about 25, 30 lakhs, and if that grows to, let's say, 50 lakhs over time, should he consider moving into the PMS structure? What is the sort of how should he
Right.
go about?
Yeah, so I think Mihir has. I really remember Mihir has invested with us for a very long time. He works as a gaming company, and he's been a big proponent of what we do. And Mihir definitely, as your portfolio grows, you can allocate definitely the amount into a couple of our strategies, right? And that see, the only challenge when we see investments happening through a small case is that the orders go out as single orders, right? And that can create a huge impact if you're investing a large amount into these products, right?
Mm-hmm.
So you could eventually, if your portfolio grows to a size of 50, which I'm very confident happens for you very soon, Mihir, you can definitely switch to PMS. You can just reach out to us. It will make that happen. In the meantime, you can, definitely use a few of our strategies and create a diversified portfolio, reducing the impact as well, right?
Got it. Got it. Here's a question from Pavan, which is kind of interesting. Is that if they would like to sort of reduce their allocation in a small case, how should they sort of go about it? If they want to sort of exit it from it as well, like what is the best practice so that they do
Right.
get, let's say, the portfolio's benefit, but also have a chance to sort of exit and take some of the benefits and
Right.
profits out.
Yes, so you can do a manage portfolio on the small case app, right? You can go to your portfolio, click on the manage button, and you can decide which all stocks you want to exit, and you can do a systematic exit from it. Or when there's a full exit button there as well, right? If you click on that, then all those stocks are sold in your broking account as well. So you can take either of these options. I would say go with the manage option so that you do it in a systematic fashion.
Got it. And so again, a question around PMS and small case. Maybe we take it up in the next session. But any sort of short point on this? They're trying to understand what is the difference between PMS and small case, and why should they go towards PMS where the fees might be a little higher. Any
Right.
sort
So
of
I think we've talked about it a lot in our various live streams, right? We've been
yeah.
answered this at various times. But PMS is a structure where we end up managing the money as a whole instead of just giving advisory like what happens in the small case platform. And
Mhm.
if we manage the money as a whole, then we you get a little bit of execution preference, you get better execution, etc. And but it totally depends on your preference, right? If you like working with a small case, then please do that. If you want somebody to manage your portfolio as a whole, then PMS is a better structure for you. You won't have to come back and rebalance on your own, right?
Fair enough. Fair enough. And Aditya has a question here again on booking partial profits. And sort of looking at how to sort of manually do it. I think Aditya, we've answered that. You can look at the small case app and identify what stocks you want to sell, what stocks you don't want to sell, and sort of figure out how you sort of want to go about it in that sort of fashion. Sagar is asking if you can do a meetup in Delhi also. Uh, we can definitely consider it at some point.
Definitely, we should plan it out. Like Mumbai, though, we can definitely do it soon, but Delhi we'll have to plan, and other places as well, right? Hyderabad, I think we see a lot of people.
For sure, for sure. You suggest, okay. Just a few more questions and can I shift momentum? So there are people who have invested in some of the other portfolios of ours, like Balance Multi-Factor, got stable returns from it. Around 23% is what Shiva is quoting here. He's asking if we should shift to Momentum. So any thoughts on what existing other small
Right.
case?
So I won't say switch your your subscription. I would say balance is a very strong strategy, and that the name says it's a very balanced strategy. I think if any sort of volatility kicks in, you would see that balanced would end up becoming the stronger portfolio. But even in any bull run, it has given a strong return. So I would definitely not say switch, but if you want the flavor of momentum, you can add these portfolios into your basket as well, right?
Mhm, mhm. So Aditya, and I think I've seen a few comments of this where they're saying other small case managers may have yearly subscriptions. I'm not sure if that is
Yeah,
allowed.
so I
Any?
think that is so on small case there are two types of entities, right? One is a research analyst and one is a RIA or registered investment advisor, right? So for investment advisors, the SEBI rule says that you can only invest, you can only take 6 month fee. So I think a few of these guys, if I'm not wrong, Green Portfolio, Niveshaya, etc., are RIAs, whereas weekend investing is an RA, right? Or windmill is an RA. So an RA doesn't have that rule. They have lesser regulation, so they can take upfront fee. I think if you sign up for those portfolios, you would see that they're asking for less KYC information also, right?
Mhm.
Whereas we ask you for a little bit information. I think that's because of the difference in the regulations that we are following.
Mhm.
But nothing can be done about that, right?
Sure. So Nipun Gupta, you're asking again about booking profits. I think we've answered that earlier. Just sort of go back maybe about 15, 20 minutes and you can sort of look at our answers there. Here's an interesting question. Ganesh is asking, if he has about 3 to 4 lakhs to deploy, would you recommend a lump sum or an SIP model for him? What is the right sort of
Right.
thought
So,
around it?
I mean, see, if you want to deploy, then why not do lump sum? Because we're seeing a strong opportunity happen, and that's what even when people are allocating larger capitals, right? We typically, if they leave us to us, we allocate it on day one because why not take the full value of the opportunity? But systematic investing does not hurt you, right? If we end up seeing a correction happen in the near future, then you would end up getting better buying prices. So so you can go with either of these ways, and maybe I think good time to do a lump sum, but always keep your SIPs continue, right?
Sure. Yeah. Um, Karandeep, again, just a few more questions, and I think we can wrap this up. Karandeep is asking, again, on the PMS side, if he wants to get some sort of a consistent income on a monthly basis, is that right for him? Are there any sort of should he sort of park his money and then and he doesn't want to take any major risk? How should he sort of think about it?
So I mean, can you repeat this?
So he's asking, investing in PMS can help us get consistent income per month.
Okay, yeah, yeah.
He has a certain amount of
I
money
think,
that he wants to park.
right. So I think there's some like for a few people right now. I think quite a few people. Maybe we should do a video about that, right? Like we
Mm-hmm.
have helped them structure their investment in such a way that they continue their systematic withdrawal plans out of the PMS. Right. So people want to allocate a large sum and generate income through that, right? A monthly income through that. So we've structured certain portfolios, right? Putting some allocation to liquid funds so that their short-term expenses are covered, and then allocating in such a way that it fits their risk profile. Obviously, you cannot withdraw money to take your PMS under 50 lakh, right? That is not allowed. So it totally depends on how the growth is happening. So right now, if people who've invested in the last 1 2 months, they've seen very good growth, right? And obviously they're very happy to withdraw. But let's say we saw a correction and the portfolio values goes down, then you cannot withdraw money out of the portfolio then. So there is a little bit of maths in that sense. But once your portfolio reaches like say a 5-10% gain, then I think you can have a systematic withdrawal plan that would support this.
Sure. Again, just a few more. I think we're more or less done. Sagar is asking. He's got a few of our portfolios. What should he do if he has, a bunch of these portfolios, and he's an aggressive investor? Should he, and how much should he sort of have as a minimum capital to be able to diversify in these 3, 4 schemes that he's invested in?
So if you subscribe to a bunch of our portfolios, I mean, it's totally depending on your risk profile, right? So a strategy like balanced momentum could have a higher allocation, but New India, Alpha, etc., could get smaller allocation as well. And if you're creating such a diversified basket, then this can be your whole equity allocation, right? I don't think you need to go to a mutual fund or something else to add more equity. You can diversify your equity allocation within these baskets.
Sure, sure. Okay,
Yes.
great. I think we've answered most of them, folks. I think there are a few repeating questions. You can just sort of maybe just sort of go back maybe about 20 minutes odd and listen to some of the answers there. I think we're more or less done with all the questions for today.
Perfect. Perfect. So thanks a lot, guys. We also have completed an hour of the live stream. Thanks a lot for everybody who joined, and I hope you guys have a very good Sunday and a very great week ahead for you as well as for the market, right? So
Absolutely. And guys, don't forget 20% off. Use Momentum 2023. You can use that. If you're an existing subscriber, use Momentum sub 2023 and you'll get the same sort of discount. If you have any issues, please reach out to our team at info@rightresearch.in.
perfect. Thanks a lot, guys. We'll
Thank
see
you
you
guys.
soon.
Thank you. Thank you.